Hey everyone, and thanks for jumping back into the cryptoverse. We're just going to take a quick look at Bitcoin today, look to see where we are on the weekly time frame, on the daily time frame, and also check out the regression chart. So if you guys like the content, please go ahead and subscribe to the channel. We typically like to look at things a little bit differently on the channel in terms of bringing up like our own custom charts, custom analysis. So go ahead and subscribe, and also check out the premium list in the description below. So let's go ahead and jump in. So we're looking at the BLX. You can see there's a new weekly candle. A lot of people are getting excited, because of the move here from 9,200 up, back up to around 9,600, 9,700. But we know on this channel that, again, this is business as usual. I mean, we're more or less just staying in the same range as we have been for the last, if you take it from when we first got into it, or approximately this region, you can see we've been in it for around 54 days or so. And we've talked about how in the past, getting to a level like this, where we more or less just move sideways for a while it isn't, glamorous or anything, people will complain that the price is just moving sideways. Well, if you go back, you can see that this was actually par for the course in the last market cycle, even during the accumulation phase. I mean, we pretty much just moved sideways in this region, and it took a month, and if you take this region to this region, it was another month or so of just moving sideways. So don't discount the possibility that we might just move sideways for a while, and there's nothing necessarily wrong with that. Just because we get rejected up here at 10,000 a few times does not mean that we have to head back down. In fact, to some degree, the more times that we test this, I think it becomes more and more likely that we do break it. You guys know that I am bullish on Bitcoin over the long term, and if you look at our non-bubble regression line, you can see this at just intothecryptocharts.com if you want to follow along. But you can see that we're still right on course. I mean, I haven't touched this equation since I fit it a long time ago, and it was only fit to data up until about this region right here. I think it was early January, early February where I cut off the fit. And since then, we had a mini bubble in 2019. We came back down to our primary regression line, which is, again, fit to non-bubble data, which, again, is somewhat discretionary. From here, we came to the top of the band, and then identically down to the bottom of the band. So you can see straight to the top and then down to the bottom. And then we came back to the primary regression line. So, Bitcoin, it's just, right now it's on track. There's nothing really, phenomenal about what's going on in the short term. Whether we break, 10.5, whether we go back to 6K, it's largely irrelevant again for the long term. Now, what we're looking for, again, is we're watching closely to see if we're going to experience another short-term, speculative bubble, in the coming months. This is the idea, because if we see a repeat of last summer, you can see that we came up here and had our bubble late June, early July time frame. So we're already getting into late June. But if we were to see something like that happen, it's important that you stay resolute, because we are pretty sure here. I mean, in terms of lengthening cycle theory, we're almost assuredly not going back up or going up to say 100K anytime soon. But we certainly could retest 14K in the short term. This is always on the cards. If you see it happen, I do think 14K is going to be a region that is going to be hard for us to break the first time we get to it. But if you see us get to 20K, this is ultimately the kind of like where the entire market could really start moving. So if you see Bitcoin get to 20K in the next few months, then watch closely, because if it can sustain 20K, right? So if it can sustain it, then this is when the rest of the market could significantly move. Now, if you follow my channel, you are aware that there's a lot of coins that I'm already invested in and think are going to move well before that. But in terms of, there's a lot of coins out there that will not make any substantial moves until Bitcoin gets back to its previous all-time high. When do I think, again, it'll get to its previous all-time high? I think sustainably it'll get to its previous all-time high in, at the end of 2021, where it can hold 20K. It holds it as support. We're not like, going up to 20K and then dropping back down to 14K or anything. Where we're at 20K, we can go to 25K, and if we see a correction, we go back down to 20. So in terms of seeing this sustained and where we would see maybe an explosion of the rest of the crypto market, I would anticipate more so, another, 17, 18 months or so. I'm so used to saying, 18 months, but I mean, as we go forward through time, I'm going to have to think, okay, yeah, it's getting to say 17 months or 16 months. So again, par for the course. Don't worry too much about what the price does in the short term. I would say if you see it come back down to the bottom regression line, which I think currently is around 5,500, it's somewhere between 5,000 to 6,000, which also, by the way, corresponds to the 200-week moving average is $6,000. If you see us come back here, I mean, this is not financial advice, but for me, this would present a huge opportunity. As many of you know, and as many of you did yourself, you probably purchased Bitcoin at the 200-week moving average back in March. If you go back in time and look at where we were at the 200-week, it has always held support. You can argue that there's wicks that go below it, and sure, it's great if you can pick up some Bitcoin at these lower prices. Even in March, you can see we had a wick pretty far below, down to the 300-week moving average actually. But historically speaking, the 200-week moving average has been an absolutely fantastic point to buy Bitcoin at. And if you look at the non-bubble regression line, the 200-week moving average, if we were to drop there, would correspond to the bottom of the band. So if you see the price drop, it's not something you need to freak out about. We're still on course for our, to get to say a fair valuation of 20K by, in another 18 months or so. And then from there, to go into a longer term speculative bubble that will take us, maybe another 12 to 18 months and take Bitcoin hopefully to 6 figures. So this is the goal. On this channel, we've spoken a lot about logarithmic regression this year. I'm going to continue to give you guys updates on logarithmic regression every so often. I understand that some of you guys, get tired of seeing the same chart, which I can somewhat appreciate, but I do know there's enough of you out there that do enjoy seeing these updates. But again, as we've discussed, in the future of this channel, we're going to be bringing in modern portfolio theory into the channel and using traditional finance tools and evaluations of various portfolio weightings to identify various risk reward scenarios. So instead of just me throwing up a portfolio like you see a lot of people do, or you'll see rate my portfolio, we don't deal with any of that type of nonsense on this channel. What we will deal with is, given a certain risk level and an expected return, that we can use these types of charts to identify our expected return for various coins for a given risk level, what would be the optimal portfolio weighting. So I'm working on this in the background. It's going to take a little while for me to really fully develop it and build it out. If you've missed the videos on modern portfolio theory, where I introduced, say, the Sharpe ratio, even though the Sharpe ratio was, came way after modern portfolio, theory was spoken about or shown to academia for the first time. This is something that, admittedly, looking at modern portfolio theory, the general public is not going to be as interested in. So the people that are just looking to say go leverage trade and just basically go gamble their money away, this is not going to interest that group of people. Because ultimately that's what it is. And you can make a lot of money doing that, you can lose a ton of money doing that. The opportunity cost on doing that is just insanely high. If you go and lose, say, 2 Bitcoin leverage trading or something, I mean that could be worth $250,000 in 3 or 4 years. That's why this channel is not about that. We're going to be looking at a very serious approach to the crypto markets, which I think is certainly lacking. So if you want to see that and you don't want to miss it, make sure you subscribe, because my channel is still relatively small, and so if you're watching this video and you want to make sure you see those, make sure you subscribe and then turn your notifications on. So click the bell icon so you get notified of those future videos. So we're going to be looking at Sharpe ratios of various coins. We're going to be looking at the Sortino ratios, which only punish negative volatility, so downside risk, rather than punishing upside volatility, because we want upside volatility. And if you actually look at whether something is, say, the direction, a specific asset is skewed, Bitcoin, as we will show in future videos, is positively skewed, okay? Whereas traditional markets, like the S&P 500, are negatively skewed. If that interests you, again, we'll cover that in a future video. Go ahead and subscribe. If you guys like the content, you want to see more of it, you want to be kind of in the on the short list of people that get the premium content every single week. If you guys like the public content, I can assure you I spend about 3 or 4 times the amount of time working on the premium content, these reports, these premium videos, a risk dashboard that you can use at your convenience. Even on that dashboard, you'll find ways where you can input the amount of crypto that you hold. Of course, it's all anonymous, and you can identify. It'll lay out various strategies that you could follow in terms of DCAing in and out of the market. So if you want to give that a try, check out my website. It's intothe-cryptoverse.com. You can even pay with cryptocurrency if you want to get a discount, but you have to pay for 6 or 12 months, and you'll get like a 5 or 10% discount. So we have a lot of stuff going on the channel this year. Again, we're going to still be covering regression analysis. We're still going to pull out these custom charts that I make. We're going to be expanding to other assets so that we can, as an entire community, can learn about these things, show these things where you guys can learn about them as I present them to you. And when the time comes, when crypto is getting to that point where you really don't want to be in it anymore, you'll be ready to pivot to another asset class. I recommend already diversifying into several different asset classes. I think it's ridiculous if you're all in on crypto. Personally speaking, I think that's absolutely ridiculous. But if you are all in on crypto, then you at least need to recognize that there is like an end date in terms of the projected gains that you could make in the short term. And when I say short term, I mean 3 or 4 years, because we're going to get to a point where the speculative bubble, whenever we get into one, is going to pop. And when it does pop, you're either going to be left holding a huge bag of stuff you really don't want to be holding, and you're going to have to wait maybe 6 or 7 years to see it return to its prior valuation. Or you can get out of the market at the right time when we're in these speculative bubble phases and diversify yourself into another asset class or into several asset classes, index funds, real estate, even commodities. Even if you wanted to buy individual stocks, even though statistically speaking, buying individual stocks in terms of, say, risk reward isn't really merited. And I mean, buying index funds is usually, if you're just going by the pure math, which is what I like to go by, buying index funds for every unit of bad risk that you take on, if you're talking about your expected return, index funds, I think, in my opinion, and well, really it's not even my opinion, it's what the math says, is the way to go. So again, the channel is obviously we're gonna continue talking about Bitcoin, we're gonna continue talking about Ethereum. Obviously we're gonna follow some of the other coins like Chainlink, Cardano. We are gonna be doing videos on various sectors. I'm trying to develop all this stuff. So basically, I'm trying to develop all this stuff in the background, but still recognizing that people want daily updates on Bitcoin. So again, if you're following Bitcoin, sorry to go off on my tangent there, but if you're following Bitcoin, this is just business as usual. I wouldn't, go outside, go on a walk. Don't worry about too many things here. And if you do see us break 10.5, remember, it's not about becoming euphoric at that point. You have to stay resolute. You have to stay diligent. At the end of the day, a lot of money is going to be made during the market cycle. A lot of money is going to be lost during the market cycle. And I think those that can better manage their emotions are going to be the winners, and the losers are going to be those that are FOMOing in at the worst possible time. So if you guys like the channel, you guys like the content, would love to have you subscribe. Also, we do have a Telegram channel. It's got over like 3,600 people in it. It definitely has some character, is a nice way of saying it. But if you want to join the Telegram channel, also you can find that in the description below. That, I think, will wrap it up for this video. Stay tuned for future videos as we start to really expand what this channel is all about and what you can expect to see covered on the channel. And I'll see you guys next time. Bye.